Hey guys, I want to have a couple of words about Romeo Power. And after I was talking about this company in my last video, I think I have a more reasonable price target for this company. So in today's topics, I will talk about what happened to Romeo yesterday that made the price jump by around 60%. I will explain why the price dropped in the first place, because around 3 months ago the price was around $30, and a week from now the price got to $8. And finally, I will talk about what should be a price range for Romeo Power for the next year or two. Now, as always, all what being said over here is not a financial advice. Always do your research. Let's start. So yesterday, Romeo announced long-term supply agreement with PACCAR, ticker PCAR. That company design and manufacture light, medium, and heavyweight duty trucks. Now, under the agreement, Romeo will provide battery packs, modules, and battery management systems to the electric vehicles that are manufactured by PCAR. Under the agreement, Romeo will be the supplier for 520 battery electric vehicles. Now, those vehicles are going to be manufactured in the United States and Canada. They also mentioned that the start of production is anticipated to be after 2021. Now, of course, Romeo says they're very excited about this partnership, and basically that's what made the price jump by 60% yesterday. If you can see over here, that's what happened yesterday. Now, the question is, why did the price drop in the first place? So it started over here back in December when the price started to drop from $34 and it got until $8 like a couple of days ago. Like a lot of SPAC companies, this one started with a big hype as well, and apparently the price wasn't justified yet, so we saw a correction. And we can see it right now with a lot of electric vehicle companies and other companies that got overpriced in the past few months. But in the past 2 weeks, what happened that made the price drop from $14 to $8, which is about 40%, is the fourth quarter announcement. Over here, as usual, they announced many achievements and goals they have managed to get during the last quarter. But they also said the following: as global demand for raw material outspaces supply, Romeo Power is subjected to a significant shortfall in cell capacity industry-wide and now expects its revenue for 2021 to be in the range of $18 million to $40 million. Now that's Romeo investor presentation that they published in November 2020. We will scroll down, and here we can see that the original guidance for revenue for 2021 was around $134 million. A couple of weeks from now, they adjusted it to $18 to $40 million. So the market wasn't pleased to see that kind of guidance, because that tells us around 60 or 70% revenue is gone for this year. Now for new company, it's never good news, and that's what made it go down from around, I think, $14 or maybe $12 till $8. And that's, by the way, below the price which they went public, which is $10 like every other SPAC company. So now we understand what made them jump around 60% in the past 2 days and what made them drop like 40% in the past few weeks. The next thing I want to talk about is their price target. I will go back to the investors presentation to try to get to a price estimation for that company. What I like to do is boundaries. I like to determine a price which I'm gonna be considering low, which means price that if the stock price gets there, it should be considered as a discount. And from the other hand, I like to consider what should be the high boundary, which means what should be an expensive and overvalued price for this company. As you can see, the valuation benchmarking works like that they use the enterprise value to revenue, and over here they compare Nikola, Tesla, and more. To evaluate a new company, I like to compare revenue to the market value. There is no special reason why I won't take the enterprise value, it's just a matter of personal preference. Every EV company, a new EV company, shouldn't be priced less than 20 times their revenue, which means if we expect for 2021 $134 million, so the company's market value should be around $2.6 billion. Just to show you, at the moment the market value of the company is $1.5 billion. But the thing is, the expectations for 2021 just got adjusted, and it won't be $134 million, it's gonna be $18 to $40 million. So I'm going to look on year 2021 and 2022. By the end of 2022, we're talking about a timeline of around 18 to 20 months. Now, $40 million for 2021 would result market value of around $800 million. I'm considering that the low boundary, which means if the stock drops 50% from here, it will get to around $750 million and to around $6 per share, or even $7 per share. That will be a huge discount for this company. Now, I say discount because I believe at the end of the day, when all the shortage and all the short-term problems are going to disappear, yes, this company should proceed those numbers. In 2022, they expect to proceed around $400 million. I'm going to talk about it, but to see them proceed around $1.5 billion by 2025, I believe that's reasonable. And why do I believe they can proceed those amounts? Is because they are reaching and approaching a $225 billion market. They don't need to take a huge piece of the pie. It's enough they take few percentage from the overall market share, and they can easily get to a company that generates billions of dollars a year. So back to our valuation. So we said 2021 is expected to be $40 million of revenue and $800 million of market value. For 2022, let's assume there will be problems, still problems, and let's cut that by half. Let's say by 2022, they're expected to proceed around $200 million. Now let's multiply $200 million of revenue by 20, and that's the price to sales ratio. That should be the high boundary of their market value, $4 billion. Now we're talking about sales in 2022. Usually markets respond for the event to take place, which means if there are expectations that they will proceed $200 million by 2022, there is a chance that before 2022, maybe in mid-2021, their market value would reach $4 billion. What does it tell us? That tells us that this company has a potential upside more than 3 times, which means when the stock is going to reach $36, $40, which is 3 times the current price per share, this stock is going to be considered at the high boundary of their valuation and expensive. Now, price targets change. I always change them, and it happens when we have more information. By the way, the news about the new partnership is not really a surprise, because they already said they have already signed contracts worth $550 million, and that should be earned during a period of 5 years. And they already said that they have $2.2 billion under advanced negotiation. So I assume this partnership is just part of the $2.2 billion, and I assume we have future catalysts over here, and soon more partnership will be announced. Why am I confident about this company? Well, to be more accurate, I'm somewhat confident. From one side, I've read about the management, about the company, and they have previous experience that give me the confidence they can make this company into few $1 billion a year company. But from the other side, after reading about their products, I couldn't point of something specific that gives them any competitive advantage. I mean, I don't have an answer to the question of what prevents from someone else to start a new company that compete directly with Romeo Power. So I'm somewhat confident about this company. Okay guys, that's it for today. I hope you got some insights, and I will see you in my next video.